A breaker structure or shift-in structure is an important confluence when identifying trend reversals, and in episode 5 of Bootcamp today, I'm going to be showing you guys how you can use it to level up your trading game. Let's get straight into it. Alright, welcome back to Bootcamp episode 5. Today we're going to be talking about break of structure, shift-in structure, or like trend reversals, whatever you want to call it. To understand what a breaker structure is, we have to understand how the market trends. So first off, we have a bullish trend right here, and then we have a bearish trend right here. Now, something we have to watch are the lows and the highs in a breaker structure. So a bullish breaker structure is when price pushes past one of the lows. So we can see right here, we have a low, we create a high, we create a higher low, a higher high, and then a higher low. As soon as price pushes past the most recent swing low, or the most recent higher low, that's what you call a break of structure. And then you'd expect it to create the bearish trend that we have right here. So lower high, lower low, lower high, lower low. An example of a bearish break of structure is when price pushes above the most recent swing high and then creates a higher low. So when it pushes above the swing high and then creates a higher low, then we can expect another bullish trend. So that's the most simple way of looking at a breaker structure. So for a bullish break, we're just pushing past a swing high, and for a bearish break, we're just pushing past a swing low. So if we're going to look at some live examples right now, we can see that right here, throughout this price action, we were bearish. We're making lower lows, lower highs, lower lows. This is a higher high, but for the sake of the video, we'll say this is the lower high and then a lower low. As soon as price pushes above this most recent swing high on the 1 hour time frame, that is a breaker structure. We are now bullish, and you can see after we do that, we create a higher high, a higher low, and then create another higher high. So that's essentially what a breaker structure is on the 1 hour time frame. Here's the thing, guys. The smaller the time frame you go into, the more confluences you'll see. So on the higher time frame, if it's a high time frame breaker structure, it's going to be more powerful than a small time frame breaker structure, if you know what I mean. So a 1 hour breaker structure will usually be more powerful than a 1 minute breaker structure. So if we replay price and we look at before the breaker structure, we can see that all throughout here, price is breaking structure to the downside on the 1 minute. We break structure right here to the downside. We break structure right here to the downside. All throughout here, we break structure. And you can see we fail to push past any of the recent highs, breaking structure to the upside. But, bam, finally we break structure. We push past the recent highs, and that shows us that we're actually somewhat bullish or breaking structure / reversing. So that's the main concept of a breaker structure. We can also use like a few other confluences, like a trend line. I don't think it's as powerful as looking at highs and lows, but you can use a trend line, but I prefer to just look at the most recent high or low. But yeah, we can see it pushes past a bearish trend line, which could mean that we're pushing higher. Now, the next thing that we need to look at is the difference between a breaker structure and liquidity sweep, because if we're not careful, we can get caught up by that pretty easily. So why is this not a break of structure? When price comes and pushes down this low, why is this not a breaker structure compared to this being a breaker structure and this being a breaker structure? Why is it not a breaker structure and instead a liquidity sweep? It's because we reverse off this low being taken. After we come down and push past this low, you notice that we don't actually continue making lower highs and lower lows. So therefore we know it's a liquidity sweep. When we see a high get taken, when we see this high get taken and we continue to push past it, we know that's a valid breaker structure and the trend is probably going to reverse. If we came up to here and then we started to continue lower, I'd probably say that was just a liquidity sweep. So we know that if it's a breaker structure, it's going to continue in the original trend, but if it's a liquidity sweep, it's most likely going to reverse. Sorry, that was a bit confusing. I said if it's a breaker structure, it's going to most likely continue in the original trend, but a breaker structure can also flip the trend. As you can see, we were bearish, breaking structure, bearish, making lower structure, and then as soon as we pushed past this high, we broke structure and we flipped the trend from bearish to bullish, and you can see we start to make higher lows, higher highs, higher lows, and higher highs. So that's the main concept of breaker structure. It's pretty simple. Mainly you just want to look for a breaker structure at a liquidity sweep. So that this is where I said the confluences are all starting together, so you can find, so you can make your gun to hit the bullseye, right? We want to look for a liquidity sweep, and then we want to look for a breaker structure, because we know, let's say for example, if we want to take a long, and we come down and we take out sell side liquidity, take out the lows, we know that banks want to buy low so that they can just get and make more money because they're buying low. Then we can use breaker structures as confirmation, as confluence, because who knows, we might just continue going lower and we could just lose money, right? If we press buy here because we think it's a liquidity sweep, we might still lose because it might just continue lower. But as soon as price starts making bullish structure or break structure, for example, we push past the most recent swing high, and then we make a higher low, right? A higher low right here, showing that the price is somewhat bullish. This is where you'd want to buy, and then that's what breaker structure is for. When you're in an area, whether that's a liquidity sweep, and then you see the trend reverse with a breaker structure, that is like sort of how you use it. You don't just take a breaker structure like randomly, but everything is in context. Everything has to work together. For a bearish example, a bearish breaker structure. Let's say price comes up and takes out buy side liquidity right here. Do we press short straight away? Do we press sell right away? Do we start adding short positions straight away? No, we don't do that, because we got to wait for confirmation. We got to wait for confirmation that the price is that the trend is going to reverse. So obviously up until this point, we're going to be bullish, right? We're going to be making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. As soon as price pushes past one of the most recent swing lows and breaks structure and starts to show us that price is now bearish by making lower lows and lower highs, that's when we can start looking for a short somewhere around here. And that's how you use breaker structures. Like I said yesterday, with liquidity sweeps, we also do have to be somewhat careful, right? Because price could just liquidity sweep us right here. So we do have to you do have to put in the time and effort to watch the market and understand, is it a breaker structure, or are we just creating a Judah swing? Because that's happened to me many times. But that's how you use breaker structure. I just realized I didn't give that many good examples of clear breaker structures, so I'll just show you guys really quick some good examples on some trades that I've taken or that I've seen in the past. Okay, so right here we can see that we take out liquidity right here. So where do we want to look for a breaker structure? Well, we've got to look at the most recent price action. So we can clearly see that we're obviously bearish right here. High, low, lower high, lower low, lower high, lower low. So when we push past this high, that is when we break structure. That is when the market is going to reverse. And we can see as soon as we push past this high, we retrace and then we continue higher. So that's an example of how you use a breaker structure added with a liquidity sweep. We can look for a bearish one right now, and usually you want to look for a retracement when you get a breaker structure. But for example, we can look at the same area. We can see that we sweep this high and we look at the lows and highs. Low, high, higher low, higher high, higher low, lower high, and then we see price pushed past this low right here. That is a bearish breaker structure, and we can see that we continue bearish for a little bit. I'll show you a few more examples with a liquidity sweep. So we have another one right here where we take out liquidity right here, and then we can look at the price action again. High, low, lower high, lower low, and then we have a high right here. As soon as we push past this high right here, that is another breaker structure showing us that we're going to go to the upside. We'll do one more example right here. So we can see that we take out this high right here. I'll just move it over here, that high right there. And then, so we look at the highs and lows and we look for something to break structure. So we have a low, a high, a higher low, a higher high, a higher low, and then a lower high. And then as soon as we push past here, that is a breaker structure. But usually you want to look for a more clean breaker structure. So you could say that this is more of a breaker structure, but both of them are valid breaker structures. It's just this one comes back up a little bit higher. You could also say that this is a bearish breaker structure. But yeah, those are a few examples of breaker structures, and I'll see you guys later. Peace out.